SpaceX going public could become one of the most anticipated IPOs in history. For years, investors have watched the company revolutionize space travel, dominate commercial rocket launches, and build Starlink into a global satellite internet network. Now, as the possibility of a public listing becomes real, millions of retail investors are preparing to buy in on day one. But before you get caught up in the excitement, there are a few important details you need to understand. The first hidden truth is control. Many people assume that buying stock automatically gives them a meaningful voice in a company's direction. But in reality, companies like SpaceX are often structured so that founders retain majority control through special voting rights. This means Elon Musk could continue making all major strategic decisions even after the company goes public. While some investors see this as a strength because of his track record, others see it as a risk because shareholders have limited influence and reduced accountability. The second hidden truth is Starlink. While SpaceX is famous for rockets and space missions, a large portion of its future valuation may depend on Starlink, its satellite internet business. Starlink has grown quickly and offers a powerful subscription-based model, which investors typically value very highly. However, the risks are just as real. Competition is increasing from players like Amazon's Project Kuiper, and the costs of launching, maintaining, and upgrading thousands of satellites are extremely high. On top of that, regulatory pressure across different countries could slow expansion. If Starlink underperforms expectations, it could significantly impact SpaceX's overall valuation. The third hidden truth involves insider selling. After most IPOs, early investors and insiders are restricted from selling their shares for a set period known as a lockup. This is meant to prevent sudden selling pressure right after a company goes public. However, IPO filings sometimes include exceptions or structured deals that allow certain investors to exit earlier than expected. If large amounts of stock hit the market sooner than anticipated, it can create volatility and downward pressure on the share price, especially in the early stages of trading. None of this means SpaceX is a bad investment. In fact, it remains one of the most innovative and influential companies in the world, pushing the boundaries of space exploration and satellite communication. But there's a difference between a great company and a great investment. Even the best businesses can be poor investments if expectations are too high or risks are ignored. Before buying SpaceX stock, ask yourself 3 key questions. Who actually controls the company? Where does most of its future growth come from? And when are insiders allowed to sell? If you can't confidently answer those, you may be investing based more on hype than understanding. SpaceX could become one of the defining companies of this generation, but the biggest winners in the market are rarely the ones who rush in first. They're the ones who take the time to understand what they're buying. If you found this breakdown helpful, subscribe for more business and finance content. And if you want weekly insights on investing, wealth building, and financial freedom explained in a simple, high-quality way, make sure to join my free newsletter using the link in the description.